Greetings, positive trenders. Hope everybody's having a blessed weekend. Welcome to newsletter volume 21 of the Positive Trends newsletter. So awesome. Really excited about this week's edition. We just kind of start off. We kind of talk about what happened this week. Real quick. I mean, right, the monthly chart. Right, we see kind of a red hammer forming. The green hammer off of the mid Bollinger Band is really significant here. Really got a big bounce. We'll look at the NQ, how it bounced right off the lower Bollinger Band later. Let's take a look here. I mean, really, this week was pretty phenomenal. 1, 2, 3, 4, 5 days. So we gapped down on Monday significantly, right? And then we flushed through there, right? But what this did is it gave us this downward trend line. And then the next day gave us an inside day, right, with a breakout point right here. So, and then this formed an outside day. So we had inside, outside, and then we just kind of gapped up right here and had a real big move, which filled some gaps, right, 2 big gaps of this island top of the SPX, and then inside day on Friday. So really interesting stuff kind of going on with the market. It just seems like the same thing over and over again, right? So, but yeah, so this week we're kind of talking a little bit more about the gap and go, right? This is something that we were trying to focus on this week. Just to get like a nice, kind of move at the open when we do our live streams at the open. And so, so one example that we saw is Shake Shack, right? So Shake Shack had we want to capitalize on these, right? These are the big, big green days, right? Look at that bar. I mean, right? Everybody wants a piece of that, right? You don't want to just like stare and be like, man, why couldn't I get like all those points off of that, right? So what we have to do, the true gap and go, right, is going to be over anything, right? So basically these all-time high gap and goes or the all-time low gap and goes, right? So to the upside or the downside. But here we are. Here's the all-time high of Shake Shack, right? That was the key level. Now what was interesting is we didn't gap above it, but we pushed through it, right? So what we do is we go through and we look at the different rules that are kind of that make up these gap and goes, right? So we kind of talk about those individually with some different examples, right? But real quick, just a review of Shake Shack, right? If we recall, if we go to the 3-minute chart on its day, right? On its gap and go day, right? What did it do? It gave a couple of things. These pre-market levels that we talked about in the last newsletter are very important, right? The after hours high and low, and also the pre-market, which you can see is defined by this dashed line here down the middle. The pre-market high and low is what we call the pre-market box. Okay, so we want to get out of the box, right? And so these gap and go potentials have that opportunity, right? So if we close above the box or above this gap and go line, that gives a potential long, right? So here we saw that we had an upper shadow right here, right? So that's key, but we did close above the box. So one rule, right, is that we can enter here, right, as we close above the box. So we'll go through the rules in a second here, but also another rule is a pull back to the box. So this was the first move; it couldn't get through it, right? But even if you entered here and you had to stop basically down here, you'd have been okay. But here is a nice pullback to the box of the signal bar, right, an inside bar right here, right, and that tried to move, right, gave a kind of a minor high, and then this confirmation bar right here, right, volatility is high. You really want confirmation bars, right, and then so that kind of pushed up there. Came back in, gave you one more signal bar right here, right to the VWAP, right to the gap and go level, and then it was off to the races, right? So there it goes. So just those are the ones that we want to catch, and we just have to catch, right? So sometimes it's better just to go less, right, on the size of your options, right, just to get keep your stops kind of like lotto style. And then just let the trade work. But if you have to refine it, right, you got to do percentages below certain levels, right, within those options. So you just have to be careful with those. So so rule number 1, okay, is use the pre-market box. Okay, and so that's broken up into a couple pieces. So 1A, right, is if the price makes a green hammer on the 3-minute chart at the bottom of the pre-market box, look to go long. So Match.com did that. Okay, so MTCH. Okay, so Match.com, let's go back to the daily chart and kind of see where it started, right? So Match.com, right, that was an all-time high gap up, right? Big bar too, right? You want to catch the meat of that, right? We all do. And so here we are. Here's the gap and go high right here. We gapped above it. The last one, right, we just looked at Shake Shack was sort of like gapped kind of like in here, right? And then it pushed through it, but here we gapped above it. Okay, so let's take a look at what the pre-market box did, okay? So let's go to the 3-minute chart. Let's go to the gap and go. All right, I'm going to have to auto-zoom in here 1 second. Okay. All right, so here's the pre-market box. Okay. And so what did it do? Now you'll see these blue bars right here. These are, this is actually a green bar right here. It was a reversal bar. So what it did is it gave a key reversal bar back into the pre-market box, right? And it closed above the VWAP. So what that does is it gives us an entry point right here. Okay, very early. That's only 9 minutes into the trading day, and then you can take that entry right here, and there's your first push to the the first resistance level, which is the top of the pre-market box. Okay, and then what was the next? Another rule is a pullback into the pre-market box or to it. So we had one pullback right here. It gave you a nice hammer right here, right? Actionable signal to go, right? So you can take that up, right? And then it got through these two resistance levels, gave us a bull flag, and then all the way back up. So that's part A. Okay. Part B of Rule 1 is if the price makes a green bar on the 3-minute chart that closes above the pre-market box, look to go long. Well, that's Shake Jack. We just looked at that one, so that's good. Finally, or not finally, we'll see if it's extremely aggressive, right? This is an aggressive rule, but you can take it when we start to push through the pre-market box. So Roku did this, right? Roku is really tough. Because and we'll talk about that, because the first 3-minute bar was very long. Okay, so what we want is where's our day one? Where's our gap? Gap and glow. So here it is. This was earnings day, right? Here's your pre-market box. This is very big, lots of data, right? It was gapping up pretty high, right? This was kind of the key. We would have preferred to open here to get that kind of explosive move, but here, it had a lot of strength kind of coming into the open, right? But it had that pullback. But look at this bar, right? So waiting for a long bar like that to close, it's too late, right? So sometimes we can just go ahead and just take the entry through the pre-market box level and just keep lotto style, but essentially keep a stop at the low of the day and then look for a momentum move. Guys, this is really risky. You got to move your stops really quickly and just kind of snag that money and just kind of wait for another setup later, right? And so Roku did give it another setup later. It pulled back, gave a nice hammer right here inside the pre-market box on the pullback to the box, and then pushed out, right? We'll give one more setup, right? Give a strong Yorikiri bar back outside of the box, and then that gave it a nice move up right there. So, so that was Roku. Okay, and then let's see. On part D is look for pullbacks to the pre-market box within the first hour of trading and try to find an actionable signal for more push outside the box. And that was right here, just like Roku. Okay, so we looked at that there. There was also one TTD the other day. Gave it a good one. Okay, let me auto zoom in this. Okay, so TTD, yep, right here. So Friday earnings. Okay, so that gave a momentum move outside the box. So that was that last rule. We can try to trade that. It's very aggressive, right? Because if you wait here, one of the rules later we'll see is that we get these expanded first 3-minute bars that are like huge ATRs, right, or relative to the ATR, right? You don't want to trade those, right? That's what happened to Roku. Kind of pulled back in, right? It's too big. It's too big to jump in on that bar, right? So we want it reasonably within that range if we're going to take a long off the 3-minute bar. So we wait for the pullback, okay, and it came. Right, you had to wait till 10:30, but it is what it is, right? So that's about an hour there. So 10:30 it hit here, and then you just wait for an actionable signal, right? And so we, almost got like a Morningstar reversal right here, not quite, but you get the idea. We had a nice inside 3 right here, and that was your signal to get out of the box, and that was actually a good move. I believe these went from like 60 cents on the options, whatever the 275s, I think they went from 60 cents, they went all the way to $2.50 something cents. So just on that move right there, right? Because this is a big moving stock. So so that was TTD. Okay. Rule number 2, do not trade a 3-minute bar if it's larger than the average true range of the stock itself or relatively close. Okay, that's just key. Okay, so that's just kind of going back to this right here. The range of this bar, right, was 16 points. Okay, TTD, just you don't have to calculate the exact average true range. This is just kind of a rule of thumb, right? I mean, the daily range here was 22, right? And one 3-minute bar went 16, right? This was 12. This is a whole day, 12, 16, an entire day, right? So when the first 3-minute goes 16 points, right? That's you don't want to jump in on that, right? It's exhausted. Okay, so that's the idea there. So unless you're catching, right, that momentum move through here, that very aggressive momentum move through here. Okay, so that's rule number 2. Rule number 3. Identify the after-hour support and resistance levels. These are usually highs and lows of the prior day after the close, particularly if earnings or news came out in the evening. And have respect for them. If they break out beyond those, there's more movement possible. Okay? So really, just kind of go through some examples there. But the idea is this. We have like Carvana, right? So CVNA. Oh, not CNVA. CVNA. Okay? So with Carvana, And there's a really cool picture in the newsletter of them doing the car vending machines, right? So Carvana was interesting, right? So Carvana did not break above all-time highs, but it did get over this minor pivot right here, a major pivot on the daily. So that was the gap and go level, and it did give a nice move, right? But it wasn't until really right the day after where it broke over this high and then this high where it finally really got the push it needed. Anyway, the point is that these have levels, right, that we still need to respect, okay? And let's go to the those earnings levels right here, okay? And so at the aftermarket levels, you can see we didn't get here, but you had the aftermarket levels here and here, right? And then of course down here. So when it gets to those levels, we just have to pay attention to those, okay? And that is one to look at, right? So in the newsletter, we talk about Zillow. Okay, so Zillow was very similar, just opposite. Okay, this gapped below, GG1, right? This minor pivot here. You could have called this GG1 if you wanted to, but either one. This is kind of major, right? This is kind of major pivot. I mean, you could use that one too. And here's your GG2, right? So we kind of gapped below this GG2, right? But we still have to respect the aftermarket levels. Okay, so if you go to the 3-minute chart, right? We had this was right. Here's the dashed line that represents pre-market. So we have our pre-market box. We have the aftermarket levels, right? So here's your high, here's your low. And you could look at, I had this one here too. It's still important, right? So when we went down, right, it tried to reverse itself, right? Right, and that's one of the things that can happen, right? Is that it can reverse if it can't get below one of the gap and go levels, right? So it tried to reverse itself, but look how it respected this level and this level. Those were the aftermarket levels right there, right? That were important. Okay, so it respected those, and then it finally flushed through the box. So that was your momentum move right there. Okay, but then look where it paused. It kind of paused right here at the aftermarket level, then here, and then it respected those levels out throughout the rest of the day, and then finally got over the VWAP here with a signal bar, outside bar, and then back up, right? So so Zillow, right, is an example of just kind of respecting those levels, okay? And let's see, rule number 4, look for price action later on the 15-minute chart. Okay, so if the breakout of the pre-market box does not occur, observe the 15-minute chart for potential exhaustion or to trade your 15 orbs, right? So lift is just, a quick example. And, there's other ones that are not necessarily gap and goes, but when we use our 15 orb list, when we see these potential breakout points through the aftermarket levels in the pre-market box, we need to respect the 15-minute chart. Okay, so if we go to lift, where were we? Here. Okay, so here was lift's earning day. Okay, here's your pre-market box. It couldn't get out of it, right? But this was a gap down, right? So it was just a reversal back off that. So we had a little momentum move here through that. I mean, we actually could have taken this inside 3 as a trigger, right, below the VWAP to go down, right, to even get to these levels. But anyway, these levels, you can see these aftermarket levels were all respected, right? And at the same time, if we go to the 15-minute chart, right, you can see how much. Where's our earnings again on this? Sorry, I had to go back. I have a lot of stuff here for examples. So here we go. So we have this, right? So we have the big 15-minute bar, which is potential exhaustion. So if you're looking to short this, right, after 15 minutes, I mean, it's just, yeah, you could have got a little bit of it. But look, we had the aftermarket levels, and we had a really exhausted 15-minute bar. That's a big bar, right? 3 points on lift, right, on one 15-minute bar is big, right? Then it just kind of chopped around, double inside, tried to do a little reversal, right? Give you this nice topping tail right here, right? Spinning top topping tail in the box. It actually gave you a nice short opportunity, right? So so that was lift. But yeah, pay attention and respect those 15-minute those bars. And finally, rule 5: if a stock has promises within the pre-market box, looks for pullbacks to the VWAP. Okay, so CVS was not was one of them. It was not a true gap and go, but it was a nice 15 orb and had some potential, right? So that's what we look. That's what we look for. Is we look for price action to help trigger these 15-minute orbs to move. Okay, so here we go. We had this was the earnings day right here. It had a nice gap up, right? We had a couple levels, right? You can't really see it here because I had a trend line, but that was GG1, right? There was GG2 and GG3. Okay, so we gapped below, right? Here, this could have been like GG, 0.05, right? Because it gapped over that level, right? But when we look and we kind of go into it here. Let's go there. Okay. So, we want to see if we can push this GG1. But, if we remember CVS from that day, it wasn't really a kind of a gap and goer, right? So we still look for creative setups to get us going on it, right? So this was the day, right? So we're within the pre-market box, so none of the rules really work, right? I mean, this is a pretty big range on the bar, but you don't mess with it, right? And we weren't over the GG1 level. We weren't even over the pre-market box, right? So it was just kind of just chopping in here all day. But we look for actionable signals that, once we get over here, GG1, right? I mean, here's a possible entry right here, but a pullback is really, really nice because this pulled back to GG1 and the VWAP. And look at this. You had an outside-inside setup right here, right? Actually, it's an inside-outside-inside, right? So it's starting to get significant, right? This is very, very important right here at the GG1 and the VWAP. And that ultimately gave a move out of the box, right, out of the 15 orb, and ended up being a really nice trade that day. So these are all tools that we can combine together, not only with the 15 orbs, but also looking for these gap and go type levels to see if we can get some more momentum out of them. And then finally, okay, I thought that was finally. Let's see. So if a gap and go potential stock fails to breach the gap and go levels, then look for a reversal. Okay, so GWPH was perfect for that. Okay, so let's take a look at that. So GWPH. It's amazing when you go back and you look at all these, you're like, wow, that was so long ago, right? So, but especially when you look at Procter & Gamble. But anyway, GWPH, right? Here's your gap and go level. If you go to the daily chart, why? Well, that was the most recent minor pivot, right? It couldn't get over it. It couldn't get it. So there was no gap and go possible on this thing. It couldn't get over it, right? So what happens there? Well, that's great reversal contender, right? So this is another setup, right, that we look at. So there's a couple some price action here that happened that day. Here we go. Here's your box. Okay. All right. So, right, it couldn't get over the gap and go level. All right, gave a nice reversal hammer, right? So that's a possibility, right? But these reversal hammers, and you could have gone long here, you would have made some money on it. But again, we also want that to be true gap and go on these reversal. We want to be over the GG1 for these hammers, for these pullbacks here. Okay. So this came up, gave an outside bar, right, and kind of reverse here, and then you had the momentum move through the pre-market box. And then you go to the 15. Here, one second. Okay, so if we go to the 15-minute chart here, let me just pull this up real quick. All right, so we go here, right, what do we have? We had a nice price action here. We had outside inside, right, on the 15. And so what did that do? That ended up giving a nice short here. We're below the VWAP and giving a nice move down. That actually was pretty significant. I think that was a double on the option. It's just on that one bar. Okay, so we knew we couldn't get over the GG1 level. None of these bars could do it. We had an inside bar. It was down below the VWAP, right? Even if you didn't catch that, we had an actionable signal here, double actionable signal right here, and a push down. Okay, ultimately what it did is it gave a double inside 15, right, and then kind of reverse back up. But still, that was the kind of the idea, and it never got back above that GG1 level until the next day. So interesting stuff there, right? Good. And then finally, rule 7: try to avoid mergers and acquisitions gaps. Okay. Unless it's for the purchasing company, but we use that for the 30 orb the next day. Okay. And then I go over the AGN on that. Okay. From there, we look at earnings coming up this week. We've got some big ones coming up. We've got Cisco, Walmart, Nvidia, John Deere, and a couple others. So it's really, really good stuff. We look at some IPOs, of course, and then we go to SPX. So let's take a look at SPX here. Okay. Let's let this load up, and let's get to the quarterly chart and see how that's looking. Okay. So it's always important to go back and look at these ones, right? It gives you a real good clue. Okay, so quarterly chart, we've got a spinning top right now in the quarter, right? But look at the momentum that we had once we got into the prior quarter's range, right? That was very significant, right? That's how price action works, okay? The monthly, right? We broke down below the prior month's low. We got that movement down that side, okay? The weekly, same thing. We filled a lot of gaps, and then look at that. We finished up with a hammer, right? And the daily, right? Nice, right? We got over the downward trend line here, which you can't see right here, but the idea is we had an inside day, right, outside day, and then finally gapped up, filled like the island top gaps, and then had an inside day right here. So very important stuff. And then from there, of course, we go on and we look at our clouds and our kelts. So let's kind of see what's happening there. So here's the cloud, right? So you can see this inflection point right here is really important on the weekly, right? It's kind of projecting a potential move, right? Plus we're pretty extended, right? We went from like kind of tight on the cloud to super extended, right? Because the cloud dropped too. And so there's a lot of pieces in motion here, right? We go to the Keltner channel. Look at that nice drop off the lower Keltner channel this week. And then we've got the inflection channel that we saw here, or the inflection on the cloud that we saw here. And then now I'm really kind of liking this, that we're above the cloud and we had an inside day. So if it really got below, above Friday's highs, right, we could see a nice move up. Otherwise, it might go back in the cloud and then it could just become a choppy mess. So that gives some clues there. We go to the Bollinger Band, right, on the daily. Bollinger Band on daily, right? So you can see here, 3 days below it, right? Actually, 1, 2, 3, 4. 4 days below the Bollinger Band is enough. Enough is enough, right? Then it closed above it and then gave that move up. So that's always important to take a look at, okay? The daily, we go to the daily Keltner, which is right here. If it'll click, give it a second to load itself. Okay, so back to the daily Keltner channel, right? These flushes below the lower Keltner channel usually have a good reversion move, and so that's what happened right here, right? Pushed down inside, and then it finally got above the Keltner channel on the daily there. So that was that. Let's go to the Elliott wave. So Elliott wave's got me a little bit concerned right now, right? Because we have a potential wave 5 finished here, and usually what happens after wave 5 is you have an A, B, C, and then you start working your way back up again, right? So, but this first A, right after wave 5 is really, really steep, right? And I mean, you can kind of put an impulsive wave in there, like 1, 2, 3, 4, 5-ish, right? That's like per bar. And then, but if that's the case, look how steep the wave B is, right? So this actually does look like a zigzag, right? A, B, and if that's the case and wave B is done, right? A, B, C, wave 3, right? Because it has to be 5, 3, 5, then goodness gracious, guys, this thing could flush, right? We could get a big move and fill this gap down here, right? And then we might find, some support and all that stuff in this, 29, 2740 area, and then start working on a wave, an impulsive wave back up. So watch out for that. That is a possibility. And the pitchfork, which is kind of coming next, actually kind of supports this a little bit. If we look here, having trouble, right, getting above this resistance zone. So if we can get above that, everything's good. We're out of the clear. We'll redo the Elliott wave, right? But if not, if this becomes true resistance right here, we've got the median line, right? But then here we've got the 200-day moving average, and then we got the midpoint line down here. I mean, so there's a lot of possibilities here. So if that Elliott wave count is correct, watch out below, right? Okay, so that's basically it. We go through, the pivot levels, which we do daily. But let's take a look here at the summary, okay? So this is the big deal right here. This is where it all kind of comes down to, okay? So right here, my friends, all right, so we had this, right? This was we filled tons of gaps this week. We've got one open gap below, all right? So we broke down this trend line. This was the minor pivot, and that started the flush to the downside, right? That's using trend lines. Now, it gets a little bit more complex here, right? Because we're kind of in a bump and run type situation, right? So we had this, really, really this would have been like a super tight trend line right there. We started to work out of it, but look what we're doing. We're coming into a much, more macro trend line right here, right? So if we can't get above this 2940 level, the trend is still down until proven otherwise, right? So if anything, this is just a bump and run. Right now, if we get a run, then we're good, right? We'll probably push to all-time highs. Everything's great. But if we can't get above this trend line, then look to see more downside action, okay? And all over again. So anyway, so that was that. So then we move into the VIX, okay? So a couple cool things with the VIX, right? We've been looking at I'm actually gonna skip. Actually, we'll go here. It's fine. So we go to the Bollinger Band on the VIX, right? So this also was 1, 2, 3, 4 days above the upper Bollinger Band on the VIX. Usually that's enough, right? And then we got a little bit of down. Oh, tried to get back up again, so it was a little rambunctious. But that IV of the VIX has been pretty high. Okay, and then we look at our cloud, and where's our cloud? Where's our VIX? There's the VIX. It always likes to hide itself for some reason. No, it's Tesla. Where's the VIX? I guess that's it right here. So here we go, the VIX of the cloud. Okay, so we're below the cloud, so things are starting to look good, except we need to get this IV below 0.90, okay? And then thanks to Elaine, too, for showing us intraday possibilities with the extended hours trading cloud, right? Because we remember here when we pushed below the cloud this day, right, the market went up like, 50 points or something like that. So we got to keep an eye on that. But both are below the cloud. So what this is doing is it's showing us that there is a possibility that the reversal is here, but we need to get this IV down. And the only way to do that is to drop the VIX, which means the market should start going up. So that's basically that. Let's take a look at the NASDAQ real quick. So the NASDAQ weekly, Give it a second to load up here. All right. NASDAQ weekly, look at that. Sharp bounce off of the lower Bollinger Band. Daily, very similar to the SPX inside day on Friday. Okay, and then we take a look at our comparison between the Qs and our fangers. Let's see. So we've got this. Where's our? There we go. Weekly. All right. So look, nice bounce off of the lower Bollinger Band, came back. Our lower Keltner channel came back up. Facebook. Okay, Facebook, not quite, didn't quite touch the lower, but look at that. Look how it filled that weekly. I love this. That was such a magnet for this thing. I've been watching it this whole time, right? And it's hard to short, but once those opportunities, those setups come, look at that, perfect. Especially after last week, perfect opportunity to fill that gap on Facebook this week. So very, very nice stuff. That should have been the trade of the week. Apple, big move off of earnings. Now it's kind of holding its mid Keltner channel. Amazon. Very similar to the Qs. Starting to curl over here on the Kelt, so it's starting to change trend a little bit because it took a couple weeks below. It wasn't just a sharp move down and back up. So that is tagging its lower Keltner channel. So we'll see. It might give us a bounce. It's still on the radar. And then we've got what's next? What comes after Amazon? Netflix. Netflix, I mean, the trend is down, guys. I mean, and this is like, any snapback is shortable on this thing. It's just starting to trend down. So it's at the lower Keltner channel. So just look, see if it gives another push up, maybe to like 340 or something like that. But I believe that would, very possibly be shortable. And then finally, Nvidia is the last fanger not to report earnings yet. That's this week. Okay, so you can see the Keltners are really, really flat. So Nvidia has an opportunity to impress if it wants to. So we'll keep an eye on that. That was our trade of the week last week. It was just didn't give us the setup that we wanted, but we still look for other setups if we can get it. So Google just kind of hanging around the mid Keltner channel. So we're seeing lots of divergences still in the FANG. So it doesn't really give us any real clue with what's happening. So so we'll see if the rest of them want to touch their lower Keltner channels to follow up with the Nasdaq and then bounce if they're just kind of lagging, or if we're looking for some new setups there. Okay. Then we go to the Dow. Okay, so let's let's pull up the YM, and then we'll go to the Dow list too, so everybody can see that. Okay, where's our Dow? Dow Jones right here. Okay, so let's go just take a look at the weekly chart on the Dow Jones Industrial Average futures. Okay, so nice big hammer there off the lower Bollinger Band, and here very similarly got above its mid Bollinger Band. Didn't actually have a low Bollinger Band. Didn't have an inside day. Put a little bit above it, so that's interesting. But a nice Harami day on that too. Okay, Dow Jones mostly red on Friday. McDonald's had a pretty big move. So, look at that pie, 3.14. Anyway, so maybe they're going to start selling pie there. Anyway, so good stuff. So there's the Dow. And I review a couple more Dow stocks that look interesting. And then, of course, we move into our trade of the week, which is Walgreens Booz Allen, WBA, Walgreens. So, guys, this has gotten beat up a lot. It's starting to look nice here on the daily. I like how it's already broken out, right, of its downward trend line, right, and pulled back a little bit. What I really, really like is look where that pullback is. And we haven't had one of these in a while. A nice Dow component cloud break. So here we are, right? Here's that breakout below the downward trend line right here, and then it pulled back, right? These are the ones, like if we went long here, we'd be like, oh, okay, we're just in a little pullback. So this actually gives us an opportunity to catch this cloud break, right? We're already over, the trend is already changing, right? So if we can get above, Friday's high or whatever the case is, we could get a nice cloud break right here, guys, and get a nice move, and all this week, right, because we got ex-dividend coming pretty soon. So hopefully we can get a nice move off of Walgreens this week and put a W on the board. So that's the idea there. We go through a couple more ideas through the bottom there we can definitely keep our eye on. You'll see that a lot of our stuff usually tends to work out, and then a short idea too. And so once again, I really, really appreciate everybody. Thank you so much for your support and for your subscription and for staying a member. And also thank you for your referrals. We're getting lots of folks coming in that have been referred, and it's just great, right? We're really growing the community and doing awesome. Some folks had their best week ever this week while trading, and so it's my pleasure to be able to help everyone and so that we can grow together as a community. So thank you again. Have a blessed rest of your weekend, and remember your risk first and stay safe so you can stay in the game. And I'll talk to you guys soon.